Hello, everyone. This is Nikki, you also known as Faces Trader, and you're watching the Awesome 10X Live. It's September 11th, 2020. Thank you for watching the global market update. See what the hell is happening last night. So actually, I think a few days ago, I'm going to show you the charts first. It is loading, still loading. So a lot of people are quite, you will know at this moment in time whether you are a trader or an investor. What do we mean by being a trader? A trader will buy today and then swing trade and sell a few days from now. Whether win or lose, he would be out. Now, an investor actually is not somebody who's just holding his losers. An investor, a true investor, actually holds his winners. So let's take a look. While the charts are still loading, I'm going to show you a few things. So, okay, let's take a look at some of my favorites. Zoom video. While it is loading, I hope my other watch lists are good. It is still loading. Still loading. We have to wait. Okay. Shares are struggling off the bearish trend. Nasdaq giants fallen new. So after like a few days down, then it went up, then down. Yeah. So what I see is you're seeing choppies. So your Nasdaq is going to and fro at about 10,000 to 12,000. And it's quite normal for you to see the winners to actually emerge strong. And then what does it mean for a winner to emerge strong? It only means that when they fall, they get bought up. And then chances are the true leaders aren't even falling. They even go all-time highs, even as the market is correcting. Hey, so let's see what's happening, okay? Full featured chart. Actually, yesterday, there were some names that actually managed to go all-time highs. Nike, McDonald's, Disney's not all-time high, but somewhere at 135. We saw Peloton. Of course, Peloton did so well on their earnings. It was down 3%, but after hours, it was up 7%, still trading at all-time highs. So we will discuss what's happening with Peloton. Congratulations to those who have Peloton, of course. Everything is loading. So why don't I share to you the things that, I'm going to share a few things. Today, I've been discussed that success looks easy. There is no reason I cannot do what he's done. Now, quote unquote, easy. If you're investing, this is what it entails. David Gardner from Motley Fools never sold his Amazon $3 cost at $30 or $300 or $3,000. He would not even sell it, I believe, even if Amazon is $5,000. If you cannot hold a 100% winner of yours, geesh, easy, haha. Also, take a look at how some people are doing. He said he just added to DocuSign. His first buy was 60. His second was about $130. His third lot was about $200. He is trying to practice doubling up on the growth stock because winners keep winning. I tell you what, I bought Zoom at about 80 to 88. I bought 135. I still bought at 200. I thought that would be the last that I will pay for Zoom at 200. But today at 360, 350, actually a few days ago when the market crashed, indeed I bought Zoom at about 350 and 360. So Zoom went 405. I didn't sell. I think at the close, Zoom went 384. People talk about winners as if it's easy. The reality is holding winners, buying winners, it entails a lot of discipline to actually understand that it was wrong for me to sell at about 240, that even if I had to pay 50% higher at 360, I shouldn't have sold it. And so I have to pay the price, whether it's 50% higher, pay the price. Now, if you sold your Zoom, say if you sold it at about 180 below, and you sold erroneously, you're paying 100% higher today. Now, of course, the question is, do you even know what you own? Do you even know why you're holding on? So Zoom Video, to me, the reason why I have continued to hold is because for me, even at $100 billion valuation, the company has been growing in the pandemic. And even after pandemic, those $3 billion of sales are going to be sustainable. So those $3 billion of sales this year annually could grow to about $5 billion next year Could even grow to about 5 to 7 billion higher in the next 5 years. So to me, I'd prefer owning a company despite it being considered expensive by people because winners win. Free flow crash margin, strong, I like to buy strong companies. Beyond Meat, let me discuss. Beyond Meat is something that I said I've bought. Let's say I've bought it about 134, 135. I bought again at 125 on the news that Beyond Meat said that they were expanding and having a production facility in China. Yesterday, it broke above 134, went as high as 149, 150. I'm still holding. Now, Nikki, how do you handle holding a winner when the market is choppy? So I know this is the hardest thing for most people to do. They have a winner and they're scared that the winner, the 10, 20% gain could become just a 5%. So here's what I'll do. First, what is your percentage allocation? Now, it could be I don't know what account. Let's assume that it's a $100,000 account. Let's say you've bought 3% of Beyond Meat at 135 and 3% at 125, thinking that if the market falls, then I could buy even as low as 100, right? So 333 or 369. But Beyond Meat never fell to $100, so you only had to buy 2 times. You only bought 134, 135, and you bought again at the dip 125. So you bought the fucking dips. Now, when you bought the fucking dip, of course you bought that fucking dip because you saw that Alibaba and Starbucks, they had a partnership. You also were aware that Beyond Meat had partnerships with Yum China, KFC. You were aware that Beyond Meat also had been strong sales here, and during May, those earnings gap up from 80 to 140 because it even rose to 160, guys. You also know why Beyond Meat 160 is a resistance, because there was a secondary offering. 160 price is actually $10 billion market cap. And so you're fairly aware that at 120 billion, at $120, it was about $8 billion market cap. Now, $8 billion market cap Beyond Meat versus a potential $100 billion of sales someday in the future. If we can truly, in a year, if you are aware, it's about $1 trillion of meat. Sorry, the meat industry sales is $100 billion annually. At least $100 billion. And then Beyond Meat sales this year is around $100 million per quarter. So do you foresee Beyond Meat to have $1 billion sales in the next 5 to 10 years? If you believe that it can have 1% of the total addressable meat pie, meat industry, and also have a way to sell those Beyond Meat in China, plant-based proteins, then you agree with me that 140, 135, 120, this is too early to sell. So being an investor is being aware that there is a lot of volatility happening. But what is $3,000 on a $100,000 portfolio? It's 3%. Now you could say 5% or 6%. You could even go as high as 20% depending on your allocation. Me personally, I make it a point that I buy about 5% allocation and I let it be. Whether it goes to 158 or it goes to $200 someday, I'll just let it be. Now, of course, there's also a winner on my end. What I forgot to tell you was I was buying before last year at about 63, 69, sold some at about 150, all the way to 200. I sold there. I wasn't able to sell at 220, honestly. And so when there was a dilution, a secondary offering at 160, I was out. Like I waited my last tranche. I think I sold my last tranche at about 150, something like that. And then I got back in at about 78. And then sold in again at 120. Then this year I'm buying again here at about 120. So yeah. So I've been a consistent buyer, seller, and buyer for Beyond Meat. So this is a company that I truly love ever since they were listed. Now people are gonna discuss Tesla. Let's see. Zoom, Beyond, Tesla. What's correct about all them? They are all cult stocks. A lot of people love them. A lot of people trade them. A lot of people invest in them. I don't mind if you're a trader or an investor. I don't mind. Here's what's happening in Tesla, in my view. Tesla 330, that used to be your previous high. 330 is the 1617 mark. That used to be resistance, become support. Now, you can say all you want, but at about 429 or 393, there are temporary sellers. Now, it's easy to see why 390 and 420, you have a seller. That is $2,000 because times 5, right? Tesla had a 5-for-1 stock split. So at $2,000, some people who had this company at about $200, which was about, it was just trading at about $40 before, right? There was a long consolidation, $40, 2019. So at $400, they made 10 times their money. So sure enough, a lot of people are tempted to sell and forget, or if they will not sell all, they will at least sell partially. And there's nothing wrong about them selling. In fact, I think that is prudent to sell. So do know that if you are a Tesla investor, there will be selling pressure here at about 390 to 429. Now, what should $370 be? For all I know, it could actually go down to 330. I'm not God. I could, I wouldn't know whether it goes down to 335 or goes up to 425. But there is an uptrend here. If it breaks 330, the next support is 270. So as long as you are aware where the supports and resistances are, you can trade the ranges or you could invest whatever. If your cost, of course, is below 200, meaning you've been buying Tesla $900 below before, because $1,000 before divided by 5 is 200. So these were your costs, right? Let me show to you. These were your costs. So when the market was profit-taking, you had the option to be selling actually even as low as 330. You're still up a lot, right? Like those who bought here are selling here, no matter the ranges. Now, of course, only the short-term trader, the super traders of the world wants to buy here, sell there, buy here, sell there. But true enough, I'm not, I'm not as smart as people who buy, sell. So those are for the traders. Now, there's a lot of choppiness. I'd say that there will be choppiness 330 to 430. That is a $100 move or a $500 move if you were in stock split, pre-stock split of Tesla. Now, let's take a look at the investing.com. What's happening in your Hong Kong? Tencent. So Tencent, you could see there's a buyer here at about 500 and a seller at 550. If this gives way, it goes to about 475 and 440. So it's fine. There's going to be a lot of IPOs, and so some SPACs might be taken profits from. What's happening in Graph? So Graph is temporarily getting profit taken here at about 32. Why? Because it's 100% up. If you were buying here at about 16, 32 is 100% up. How low can this go? Okay, let's see where this can go. Usually, I see people profit taking after a 100% move. And I'd say that there will be profit taking to as low as 24 if it has to. But I don't foresee it to go to $20 because if it goes to $20, it nullifies that entire uptrend. So usually if it's a leader, I'd need to see some buyers here at about 24 to 25, 26, somewhere there. Now, what's happening with your FMCI? Tattooed Chef. Your Tattooed Chef, the same thing, 14 didn't go 28, it was 27, right? But it was still a 100% move. So actually, it was a 100% move from 12. So there. Ta-da! So right now, it is steadily holding that 2350. I'd say that there is a very strong support here at about 19.9. So if you like Tattooed Chef and you missed the run, try to see if it will pull back here at about 19.9 for an entry point. Now, what's happening with your Zoom video? Let's go. Okay, Zoom video. So you have seen 240 to 480, 100% run up. Will it retrace all the way down to about 230? I'd say that the retrace was 50%. Kaboom, 50. So far, you are seeing sellers at a 414. If Zoom video will manage to break above 14, then you've got 470 and all-time highs. Fibonacci is a very much used concept of all traders. And so if you're not traders, I'm here to explain to you how a trader thinks, but also how an investor thinks. An investor thinks it is a winner. And so an investor will probably just hold. But you could also sell a little if it hits 413, 410, and it doesn't break above it. Meaning, every time it hits 400, 410, you might see some pressure. And that pressure comes from who? That pressure comes from the trader who bought at 350, the trader who bought at 250, and some investors who bought low that wants to sell. So, of course, there's also pressure from people who got caught at 450, 460, who wants to trim their losses. So that's going to happen too. Now, what's happening in your top moves, like all-time highs? There is less selling pressure for all-time highs like Nike. So this one is just hold. And then there's also less selling pressure for Qualcomm, just a hold. So this is still a hold. Even if there was resistance at 120, you could say that as long as it is trading above 100, this is still just a hold. So if you bought it about 110 and you are scared that it can go to 100, first and foremost, assess your risk allocation. Your risk allocation has to be about 5%. So if you cannot handle the heat on a 10% drop, that means that you probably misappropriated that position size. So if you have so much position size on a company and you're not sufficiently comfortable with a 10 to 20% downside, the answer there is size, your size. C Limited, let's discuss. C Limited had quintupled for this year, 30 to 150. Quintuple is times 5. So quintuple, 30 times 5, 150. So right now, we are seeing a healthy consolidation. This was your 132 area, rally to 145, some selling pressure there. But take note, it is just a all-time high move. It can go to, in my view, if you're going to ask me where will C Limited have a resistance, my answer is it will have resistance here at about 194, near that 200 psychological mark. So I think that this is just a buy on dips. And if it deeps at about 110, then buy again. So like you have to understand who your winners are and C Limited. If you don't understand the winner, I hope that I helped illustrate that C Limited is a winner and you should continue to hold it. And if you don't believe me, it's okay. You can understand and study it for yourself. Now, what else? Nintendo, let's take a look at how the winners are profit taken. Are they profit taken? No. So Nintendo is actually just consolidating here at about 66, 68, 69. It was up 20%, hardly even corrected. So you are saying that 56, the buyers were strong, they aren't selling. Take note that the winner does not succumb to a 20% gain. In fact, even if it's a 100% gain, a real winner will not sell unless there's reason to sell. So, Nintendo, continue to hold if you have it, and continue to, probably what you'll do here is if it falls 65, you want to buy it. So 65 all the way to 61, 60, you want to buy it. Now, if you want to buy at 69, just allocate that it can fall to about 63, 10% or 20% is also possible. A better entry really is somewhere here about 64. Usually just draw a trend line. Try to wait for a consolidation. 64 and 56 looks to be a good entry. Now, what's happening to Masayoshi's 9984? SoftBank Group. SoftBank Group, okay, that used to be resistance at about 5.8. Temporary here at about 5.6, 5.7. People sold it down, 5.8. But I think at about 6.4 to 6.8, there will be sellers. So if you have SoftBank, some people are scared of SoftBank's huge volatile position on their derivative bets. So that led to the drop of SoftBank. I'd say that what happens in SoftBank, if you're going to ask me, the chart will consolidate back to about 6.4. There will be some selling pressure there. And then close to about 5.8, 5.9 right now, there's some buyers. So even if it falls there, it can even go to 5,000. There will be very strong buyer here. So the pressure is on SoftBank to actually really prove to their investors that they are prudent and doing the appropriate risk management in their investing. So the $4 billion derivative long bet of SoftBank is something that people are scared of. They're volatile because options, they're very volatile. So if you ask me, I think that SoftBank should not have needed to do those options, but Masayoshi is Masayoshi. I can't say anything about the leader who bought Grab, TikTok, when you and I could not have seen or foreseen the greatness of those investments when it was made, or Alibaba when he made it, 20% stake in Alibaba. So I don't want to question the Masayoshi. I just follow what the market thinks, and also I believe that it's a fundamental long-term uptrend. Now, Alibaba here, you can see that at 265 below, we are willing to buy at 265, even at the risk that it goes to 231. So Alibaba, I think, has rallied from about 230 to as high as 290. That was a 20%, 30% pop. In fact, some people would have bought at 205 in anticipation to the Ant Financial IPO. So I think that was a breakout move, and then take profits, and then it can even go as low as 240 to 250. So it's not like something that I am super bullish about. But if Alibaba goes down below 265 all the way to 240, I think that is a good area to be buying. Now, let's take a look at Nasdaq. Nasdaq, would it be falling down to about 10% lower? Let's take a look. If you look at Nasdaq, yes, you see the 12.4 is a resistance, but this one, you could see that 11,000 right now is becoming a support. Now, that could be a feeble support. We can go as low as 10,000. So if you are investing in the market, you should be open to the fact that the market can go 10% lower, and you shouldn't be bothered. If you are bothered with a 10% drop, chances are, number one, you aren't, you are over positioned. And over position, the only cure to an over position is cash. How much risk are you truly invested in? Let's say I have $10,000 invested in the market, 10% is $1,000. If I can handle $1,000 risk for a gain of about $5,000 to $10,000 someday, that is really how you should interpret investing. So that's really how it is. You cannot eat your cake and let's take a look. Shares are struggling to shake off the bearish mood as you get giants fall. And so are there winners amidst this sell-off? Yes, the answer there is that yes, there are winners. So this one actually, I'm happy to say that Shopping Motor was up 7% last night. So it was the very first green day. Take note that I am aware that Xiaopeng IPO is 15. So I was waiting for Xiaopeng to go 15 if I will buy another tranche. Now, so far, yesterday, Xiaopeng went up from about 17 to 19. Now, that could be fake. It can go as high as 22 and then sell down. So what do I do with IPOs? First and foremost, with IPOs, I'm aware that it can go below IPO or even touch the IPO. So I would buy small and then let it be. If it goes down to 15 and then bounces there, I'll buy. So here right now, Xiaopeng, although it's up, I'll see whether it will consolidate or what will it do. Now, in reality, there's a lot of IPOs that did well. NOx, NanoX Imaging. I don't have this, but it's already, 150% up, 22, 150. So for those who got this, congratulations. I don't have it. So I don't have winners. That was the NNOX. I didn't study it. So I would like to study it and then try to see if I could enter a dip. But I haven't studied this. Lemonade. So this one, 30 to 90, that was times 3 for the IPO. The IPO here was about $30. So at $50, that is still 100% at around 100% from the real IPO of $30. Now, the question is, do I want to buy Lemonade? Right now, I don't know, but I think that, anyway, the IPO is 30. It's something that I didn't study, but I think some people like Lemonade. So it's in my study list. I would try to study anyway, no pressure. What's going to happen here? Is it going to go 40, 50, a long time, and so forth? So it's a study, watch list. What else? Okay, let's talk about some losers. Okay, losers. GameStop. GameStop fell 15% last night, so I bought it about 770. I'm wrong, as you could see. And then I'm looking to buy somewhere here at about $6 or even at 5. So I am aware that this was a breakout here at about 6. See, that was a breakout. 6 went to 770. That was a flag. After earnings call, it fell 15% because the company GameStop lost, I think, 1.4 per share. This was an expansion loss versus last year's 30 cents loss. And then GameStop was saying that they had to close down more stores. Now, the thing about GameStop is that they have 5,000 stores, so they need to continue closing down so many stores. And I think they have been trying to really do a lot of e-commerce. Of course, video game sales are all done online. It's not through physical stores. So the more that GameStop is turning around, it's going to be volatile. So what I'll do with GameStop is that what I do know is there's support at 6 and 5. I'm not necessarily going to buy immediately. I'm going to wait for the drop to finally settle down and see whether it can consolidate even as high as 5.5. So that used to be your resistance. I want to see if that will be a support. I want to see if $6 and $5.40, is that a support? Or this is the beauty about it. If I'm wrong, it's okay. I'm going to try to sell it at about 7, 8, So I'm not always correct, and that is good because I'm not God. I'm a human being. It's not okay to always be correct. Sometimes you're wrong, and you have to accept it. If you're wrong, you bought at 770, you think it's gonna go $10, and it didn't go up, right? So that was a flag that failed after earnings. You just wait and see what will happen to the next few days and next week. So you just really have to accept it. That's why all the bets are just missed shots. Like you shoot and then it missed, so it's okay. 3%. You're not gonna die. It's okay. You can win the championship even if you miss shots. Okay, so there's a lot of stocks to discuss. Peloton went up all-time high. Congratulations to those who got it. Is there an advantage of hiring a fund manager? Um, I personally think that you could invest. But I think that everyone should learn how to invest their money. And so whether you have a $500,000 account or just a $5,000 account, you need to invest for yourself. It's for yourself. So example, I'll tell you what. Example, Spotify. So Spotify, it's part of my allocation. I have it in my portfolio. I think like right now you've got it at about 240, you sell it at 280. That is a resistance here at about 280. There was a strong selling pressure at about 300, no? So at this point in time, 240 can even open up to a selling pressure to as low as 200. But that was the support before. So why do I know that 200 is a support and 240 is a support? That's all technicals actually. And then this one is also $160, also a support. So I hold it for the long run, but I'm aware of resistances in 279, 275, those types of things. I can't answer if people should hire a fund manager. What I think is that people should learn how to invest for themselves. That's why I teach people how to invest for themselves. This is a show to teach you to invest for yourself. Is Geely a 10x name? Is it a long-term hold? So Geely, I think, is an electric vehicle that is a good company that I think at about 15, 16, 17 should just be supported. So right now at $16, 16 Hong Kong, I think that there was a strong support here at about 12. 12 went to 19, then this is your normal consolidation at about 15, 16. This to me looks like a buy. If you don't have Geely, you can buy at about 15, 16. And then there's still a higher low. My opinion is that Geely in the next 5 to 10 years will be about 25, 35, $100. So it is a support on the electric vehicle trend. Now you might wonder, Nikki, why do you have such a lofty target? That's because I think in decades. I'm not like thinking in days. Electric vehicles, in my view, is a 5-year to 10-year trend. And so making 10x your money in 10 years doesn't really sound surprising because if they sell 5 million vehicles annually someday, then they can, right? So the question is, do you even know what you own? If you don't know, actually, Geely is something like an awesome 10x pick that we have discussed in the class. So let me invite everyone to come to class 5:30 to 6:30 p.m. I'll be discussing global stock market. And then, of course, tomorrow, I'm going to invite you to register and sign up how to invest your own first ever global stock portfolio. How do you do that? Like you can register, go to our Facebook page. I'm going to share to you. Actually, it's here. Wait up. It's in my announcements page. So it's September 12th, tomorrow. How to invest globally and create your very first ever global stock portfolio. So where is that? There's actually interesting companies. You're going to be able to invest in Airbnb. You're going to be able to invest in Unity IPO, Snowflake. So there's a ton of great companies that I think that you should yourself, because this is a skill that you should be invested in. You should know what your funds are, what you have, and then you should know how to invest your money, whether it be a $2,000 account, a $10,000 account, or so much. What do you think about buying Funko now? Actually, at 550 to 570, we said to buy Funko. I think right now, Funko is at 6.2. If in the short term, I'd say that Funko would have some selling pressure at about 7.5 and then about 10. So short term, supported yan talaga sa 550. Long term, it can go 10, 15, 20. Short term resistance, 7.5. I own it. I have Funko. We said to buy it at about $5.50 to $6. The thing about me is that I know what I buy. I have a reason why I buy it. So yan, how to build your first ever 10x global stock portfolio. Go here tomorrow, 10 a.m. to 12 p.m. Just find it, and you can register here, http://bit.ly/awesome10x inner circle. So there, you can find us and there, how to globally invest in 10x trends. So yon, thank you for watching the show, and I hope that you could share it to your friends about this channel. Please subscribe and do. I'm thankful for everyone who's watching the show, and then do your own due diligence. Pa rin. At the end of the day, it's your money. So everyone should learn how to invest. Facebook, Spotify, Roku, C Limited. How do you allocate your money? If the market is high, you just make it 3%. It's not 5% per allocation. So that if the market falls, you're happy. Uy, embrace the crash. It's down 10,000 Nasdaq. I can now buy Facebook lower, diba? Anyway, Facebook's gonna go $100,000 anyway. Joke. 250 can go $2,000. 10x 10 years. Pwede. Oh, yun. So there. Thank you very much. Bye-bye.